There's a couple different ways to use them. A lot of traders use them to try and trade in between, buy when it hits the lower band, sell when it hits the higher band. That's one way to use them. Another way
Welcome back, traders and investors. We have Cate Long on the line of Puerto Rico Clearinghouse here. Cate, what did you get yourself involved in over there?
Hey, good morning, Joe. Good to be with you. So Puerto Rico Clearinghouse is a research service for bondholders. It's myself and a Puerto Rico attorney who's practiced a long time down there, and we collect and basically sell information to bondholders to keep abreast of what's happening on the fiscal side down there and then on the legal side and the legislative side. Puerto Rico has a lot of debt, some of which will be restructured, and bondholders really are very keen to know what's happening on the ground there. So that's a service we provide them.
And so it's just exclusive to Puerto Rico then?
Pretty much. I mean, I still follow the general municipal market and Detroit, of course, and now Stockton with the decision that just came down in the bankruptcy hearing. But Puerto Rico itself is pretty complex. There's all kinds of debt. There's issues at the Commonwealth level, which is their equivalent of being a state, and then their interaction with the federal government, and then there's also local governments there, and then a bunch of public corporations and unions and the legislature. There's just a lot of parties involved and a lot of moving pieces.
Okay, so you think this is something that's going to be long-term, that you're going to, stay in this advisory situation, or do you think you'll just move it to wherever the hot spots are? And second question...
Good one, Joe.
And then the second, you're going to open up a Detroit office. We can make some room for you here at Benzinga. But no, do you think that situation in Puerto Rico, do you think that that's kind of maybe been a little bit of the tipping point with things that are, for a little bit what's going on in our markets, or do you think it's just really an independent event?
You mean in the equity markets and stuff?
Well, the
broader market?
Yeah. I mean, that kind of turmoil in one part of the, world, I guess technically it's a territory, but do you think that that's kind of riled investors, just overall?
I don't think so much. I mean, it did have some effect on high-yield municipal bond funds, mutual funds, when back in July, June, when some of the big events happened and stuff. But it's pretty remote. I mean, it's interesting to me that it sort of sits in its own little orbit, away from most markets, even the municipal market. It's a big outlier. But it's pretty broadly held, the debt. There's about $70+ billion of debt, which is many times multiple of what Detroit had or is in the process of past tense having. But it's just, I think everybody's concerned, but it's just pretty unique. They have some U.S. laws apply, some don't. They have their own court system, which some of this stuff will happen in. So I don't think it's a big spillover. Most people don't.
Okay, and what about Detroit? I mean, it's been kind of quiet lately, but they seem to be pulling themselves out. What do you think? Are they close to wrapping this thing up? I mean, Orr has one heck of a job. And I was just discussing with my wife, last night. It's like, Detroit, it's just like they're clawing their way out of this hole. And I'd hate to see like a huge financial crisis, or a huge market meltdown, because that could really impede its comeback. Could you give us an update on the Detroit bankruptcy?
Right. I think that they've done a pretty good job of getting all the creditors, agreements, except we've got this one last bond insurer, FIDIC, which is not yet come to an agreement. But, Orr and his team have done quite a good job, actually. You can disagree with some of the parts of it, but overall as a package of pulling all this together. The judge seems pretty in line with what's happening for the most part. I think the big question in terms of Detroit and then the bond markets is them being able to put together this exit financing. They're looking for about $300 million of exit financing in what the market is suggesting, and then Buckfire, the investment advisor to the city, is that they'll be able to borrow at about 5.5% for short-term money, which is very high, which indicates, the bond market still considered Detroit a very risky credit. But overall, I think it's tremendous for the citizens of Detroit. I think it's a huge opportunity to remake the city. It's just long overdue. It's kind of a bit, kind of sad that it had to get so far down the road that the bankruptcy that the bankruptcy happened. It really should have happened several years ago.
There you go, mentioning my wife's first cousin again.
I know. I knew that would get you, Joe.
Okay, and I said it was her uncle last time, and I got in trouble for that, so I stand corrected. Could you mentioned the term there, exit funding, and I think it's pretty self-explanatory, but could you just, go into a little bit more detail on that?
So, part of the closing of the bankruptcy is they want to pay off some of the creditors in cash, and then have cash to start making investments in terms of improvements for the city. And I think, some of it is IT investments, just being able to manage information more readily and stuff in the city. So that money is just an additional, sort of kitty of cash, a cash pool that allows the city to, make some of these intermediate steps they need. And then, it's likely they'll try and restructure other debt after that, go back into the markets again. That's typically what we see when cities, reorganize their debts.
Okay.
So it's just sort of a cash kitty or pool of money to get going on the next phase.
Okay, and I always ask you about other municipalities or states that, may be facing the same situation as Detroit. We talked about Illinois. We've talked about a few other municipalities or states. Do you have any updates on that?
So Chicago, that's one we've talked about previously. And Chicago got downgraded to BBB by one of the credit rating agencies, which is the lowest rung of the investment grade scale, and is sort of a warning signal. And then they disclosed in the past week that rating downgrade potentially will trigger some swap terminations if they're downgraded further. And this is what happened to Detroit in 2007, and then Mayor Bing also had some issues with swap terminations, and is really one of the precipitating factors for the cash freeze in Detroit, the cash flow freeze. So Chicago, that's kind of an issue for Chicago, and I'm not sure how they'll deal with that, because they've got many pension problems there, which, actually I consider much worse than what Detroit faced.
Really?
Illinois also, Illinois is still a very weak state. So Illinois and Puerto Rico are the big outliers, the really kind of unhealthy states. New Jersey is a little bit unhealthy. And so we'll see. These politicians really have to get down and, make some huge changes, or the bond market's going to, react. And that's not a pretty thing.
Okay, so all right, so money's coming out of the market right now. Obviously, the fears of QE ending, and municipal bonds, being tax-free in nature, it seemed to be a pretty safe investment. There's some, I was just looking at some with some pretty nice yields. Is this a safe haven? Do you think people should be considering, shifting out of the market, taking their gains from these unbelievable run in the market and going into something a little bit more conservative like that? And if so, what do they need to worry about?
Well, for the most part, probably 98% of municipal bonds are fine, and will pay to maturity, and then you'll get your principal back. And, so...
Sorry, lunchtime. No, I'm just joking. That was that was the opening.
So,
of the
yes,
market.
if people have tax strategies that make sense for them to shelter income that they have, municipal bonds are fantastic. And, usually you just look at a credit rating, you kind of figure out how long you want to stay, have your principal tied up. Most people hold to maturity when they buy bonds. And, it could be a great thing. And then also, everybody's different, unique, different ages, different risk profiles, different ability to put principal away for periods of time. So, Of course, I mean, hugely popular asset class. But again, it goes back to your need for sheltering income, really, from
Okay,
taxes.
and just finally, I mean, with municipal bonds, with the market, it's all tied to the Fed, to interest rates. Auntie Jeanette made her statements a couple weeks ago about, considerable time. I'm of the persuasion that, they could talk about interest rates going up, all they want. But, with the way the economy is limping around, I mean, they may slow down the QE, but boy, I don't see rates ratcheting it up. What's your opinion on that?
Yeah, I mean, I agree. Really, there's people. There's just a lot of demand for bonds, and you get it from individuals, you get it from pension funds, from banks. There's just and there's on the municipal side, the issuance has been shrinking, so that alone constrains where yields are going to go. And, we'll see. I mean, there's always geopolitical things. There's liquidity events that can drive rates. I'm kind of the agreement with you is that there's just so much demand for safe assets that bonds seems yields will stay relatively stable. Let's say not move a lot.
And your analysis, I mean, you're looking at very specific things. I mean, how much attention do you pay to the market and the ups and downs? Do you just kind of have blinkers on and just stick with your analysis? Do you stick with your
Do you,
analysis, or
do you mean the stock market?
yeah?
Do I look at the stock? No, I rarely look at the stock market. I mean, it's there's like events that are of interest when big IPO comes, or just you sort of look at relative yields. But no, I don't follow on a daily basis. I don't follow the equity market.
Okay, is there an ETF that I should know this? Is there an ETF that a muni bond index is just something that we can follow as a whole?
The MUB, the BlackRock one, is the big one. That's for most people very liquid. They do a tremendous job. Like Sean Carney, the guy who runs it, does a tremendous job. So it's probably where I would point people in terms of liquidity and just having good access to well-run ETF.
Okay, I looked at the intraday chart and I got a little scared, but I'm looking at the daily chart and is not as bad, but it's taken a little bit of a hit. But that's what you would use as a gauge. Well, we've had Cate Long on the line, and I think that she has to be our happiest interviewer that we have on the show, and she is now with Puerto Rican Clearinghouse, evaluating the situation over there, commenting on the Detroit situation. Cate, love having you on. You liven up the show, and we hope to have you on again.
Thanks again, Jill. That's great. Be well.
Okay.